Good morning, Monday, October 27th. Welcome back to the Clubhouse Insider, where we are cutting through the noise and talking about what's really going on in the mortgage and housing markets. So this week, rates are sitting near their lowest levels in over a year. And depending on which reports you read, even up to 3 years of a low that we're looking at. So things have been really great with the average 30-year fixed hanging around 6.19%. You can see right here. So look at this here. This is awesome news. Average FHA and VA rates now start with a 5. So we're starting to really gain a lot of great momentum. Big time improvement just from a couple months ago, but we're not out of the woods completely yet. So this week, the big headline is the Federal Reserve meeting next week. So October 28th and 29th are the scheduled dates. So it's actually this week. Sorry, I misspoke. And everyone's watching to see whether they're going to hint at any future cuts or they're going to hold steady. But the big twist is that traders are flying blind right now. So because of the ongoing government shutdown, a lot of key economic data like jobs, inflation, consumer spending, all of that has not been released on schedule. So that means both the Fed and the markets are trying to make decisions without their normal roadmap. They love data. Every time Jay Powell gets on the microphone, it's data, data, data. And without it, we just don't know what they're going to do. So while mortgage rates have dropped recently, you can't assume that they're just going to keep falling and bottoming out just because the Fed might have some cuts coming up. So remember, mortgage rates follow the bond market, and the bond market follows expectations about things like inflation, growth, not just the Fed's word alone. So let's take a look at that bond market. So I've been talking for weeks now that this 10-year treasury is the thing that's most closely aligned that you can follow in the markets to mortgage rates. We want to see a 3 here, and we want to see it as close to 3.0 as possible before you start seeing huge drop-offs in rates. So last week it did have a 3.8, 3.9. It rose a little bit. So as you can see, just because we're at the bottoms and we're at the lows doesn't mean we're not going to see any kind of going back upwards with just a tiny bit higher, kind of adjustments. So you got to be really careful with that. But so mortgage rates have certainly dropped recently. But the uncertainty that we could see here, there's still some short-term rate volatility. So the good news is that because we're on the low end of the recent range, there is opportunity, especially if your rate starts with a 7 or an 8%, for example. You're absolutely going to be able to find savings. Just last week alone, we were able to find savings, a couple different, over $500 and over $700 a month for certain buyers. But again, there's a full picture that we have to look at. Do you have your homestead exemption correct here in Texas? Do you have when's the last time you looked at your insurance? Do we have a plan to fight and protest your property taxes here in Texas coming up in the spring? What about your escrow analysis? Is that correct? And then of course your interest rate and what does a refinance look like, and do those numbers look good, especially what we like to call break even, right, for the cost that you bring on for the refi. Remember, there's no such thing as a no cost or free refinance. They're always going to loop something into the loan amounts on the back end, so we just got to make sure you understand what that is and make sure it's worth it for you. But if you're a first-time buyer, an investor, someone who's self-employed, use this window to get prepared and locked in before that next data wave hits. Because if you're considering refinancing, do not chase that rumor mill. Let's run the full numbers, compare scenarios, and make sure it actually saves you money. Let's schedule a one-on-one review. If you have your most recent mortgage statement, that's basically the thing that we need to look at to get everything started. Let's make sure your plan's in place and ready to strike when the savings hits. And lastly here, let's just take a look at the chart. This is what we're seeing here, right? Over a year, we're right here at the year lows. So things are doing great. And I hope you have a great week. It's going to be exciting. Let's see what the Fed does. And Mark with Clubhouse Lending. And we'll see you next week for the Fed recap and what it really does and what it really means for your mortgage. Have a great week.